London, October 29. On Wednesday, Britain's Finance Minister, Rachel Reeves, will announce one of the largest tax hikes in 30 years to revitalise the country's struggling public services, paired with billions in new borrowing aimed at boosting the economy. The Labour government is positioning this as a first budget strategy to fund its campaign promises without sparking the market turmoil that undermined former Prime Minister Liz Truss's administration in 2022. Labour has committed to reducing wait times in the NHS, building more housing, and improving schools. It falls to this Labour Party, this Labour government, to rebuild Britain once again, Reeves stated in a preview of her upcoming speech. Nearly 4 months after Labour's electoral victory, Prime Minister Keir Starmer has emphasised that those most capable will shoulder the heaviest tax burden under the new budget plan, which Reeves will introduce in Parliament at approximately 12:30 Greenwich Mean Time. Reeves has argued that the previous Conservative government left a £22 billion gap in public finances, a claim dismissed by her predecessor, Jeremy Hunt. Higher social security costs for companies, alongside new worker protections and a higher minimum wage, may pose challenges to Labour's goals of turning Britain into the fastest-growing G7 economy. A survey by polling firm Savanta indicated that business optimism is at its lowest since Labour's victory, mirroring declines in consumer confidence. Keir Starmer and Rachel Reeves will likely be concerned at how quickly years of goodwill among businesses appears to have dissipated, noted Savanta consultant Matt McGinn. Britain's wealthier citizens are also expected to see increased taxes on capital gains, dividends, inheritances, and offshore wealth, pushing the national tax burden to a post-World War II high. According to government sources, Reeves plans around £40 billion, $52 billion, in fiscal measures, primarily through tax increases, to cover essential spending. The Institute for Fiscal Studies estimates that this would equate to 1.25% of economic output, a level of tax increase only exceeded in 1993 when Conservatives raised taxes post-recession and currency crisis. Beyond funding day-to-day expenses, Reeves intends to reassure investors that an additional £20 billion increase in borrowing will strengthen Britain's economy. The only way to drive economic growth is to invest, Reeves stated. She plans to adjust fiscal rules to enable infrastructure investments aimed at accelerating growth. A rule change could potentially unlock £53 billion, $69 billion, for borrowing, which recently stirred mild concerns in debt markets. Bond dealers polled by Reuters anticipate government borrowing this year will rise to £105 billion, up from an £87 billion estimate, leading to a bond issuance of £294 billion, the second highest on record. However, bond experts express confidence that Reeves, a former Bank of England economist, will avoid a financial crisis similar to Truss's 2022 approach. Unlike then, interest rates in major economies are falling, giving Reeves more flexibility. While the new debt target may allow for more spending in the future, possibly in a second term, the government is likely to proceed cautiously, loosening policy only after establishing credibility or if market conditions change, said Peder Beck-Fries, an economist with Global Bond Investors PIMCO.